Welcome back. I'm Pratap here. Today is 1st March 2024. In this video, let us evaluate the performance of high liquidity zones generated in our yesterday's report. And this is also going to be the completion of the February month and the number of HLQ trades executed during the month February and their statistics also we will discuss in this video. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. And all the training videos are available at our YouTube channel. And please scroll down to the playlist supply demand zone price action course and get into this playlist. And here all the training lessons are available. Even I am providing the link to this playlist in this YouTube video description. Click on the link, you will get into this page and then scroll down to the bottom of this page and here all the training lessons are available starting from lesson 1.1. All the lessons are available in an order. So please go through all these lessons one by one and strengthen your skills on supply demand zone price action. I have also provided the link to our Telegram group in this YouTube video description. Please join in our Telegram group. It will be helpful to you. Each time when we release a new video, we will provide an update in that group. Now let us get into the analysis discussion. First we will start with Nifty 50 and then we will get into analyzing our HLQ trades during the month February and then we will evaluate the high liquidity zones generated in our yesterday's report. See, we have discussed about Nifty ranges in our last Nifty and Bank Nifty supply demand zone chain video generation, report generation. So in that I have explained about the Nifty. Nifty will be ranging during this week. Nifty will be ranging between these high liquidity zone and the 5 minutes supply zones. That is what we have seen during this week. And a few days it got a resistance from the supply zone and then prices moved down. After that again prices came to this 75 minutes high liquidity zone or 125 minutes high liquidity zone. And inside we have identified a 5 minutes bear trap and which provided the support and pushed the market up. And not only that, now we have seen a Nifty has created a new zone, daily demand zone, drop, base, rally. Not only that, Nifty reached the all-time high by violating all these small 5 minutes high liquidity zones. So now we have to delete these 5 minutes high liquidity zones. Their lifetime is over. And now this is going to be a new demand zone, drop, base, rally. This is the daily demand zone. And probably the ranges also now will change. That we will discuss in our next Nifty and Bank Nifty supply demand zone chain video generation during this weekend. Now this is going to be the new demand zone. Let me draw exactly. This is the new demand zone, daily demand zone. And this is the all-time high demand zone. Drop, base, rally is the all-time high demand zone. The reason is it doesn't have any supply zones. If a stock is not having the supply zones and the one that is nearest to the all-time high is called all-time high demand zone. Now all-time high is also changed now. This is going to be the new all-time high. But anyway, now identifying the market direction towards the up direction is very difficult because we won't be having any price action closer at the all-time high. Below that we can identify the zones, but how far it will be going and how much more market will be reaching during the next week. So we cannot predict those values. Once a supply zone is identified, but only point we can identify, now at daily time frame, hour extension is started. There is a hour extension. How long this hour extension will continue, we don't know. But at one time, hour extension should complete when once prices come back to this exponential moving average 20 line. So anyway, we discuss about this Nifty and Bank Nifty supply demand zone chain in our weekend video. But before that, whatever we discussed during the last supply demand zone chain, accordingly the price movement took place during this week. So that is what I'm confirming. And next, let us discuss about the statistics. February HLQ trades. We have completed a total 44 trades are executed during the month February. Out of these 44, 36 trades are successful and 8 trades are stopped out. The success rate is 81.8%. That means close to 82%. And we have seen a failure rate around 18%, because we are expecting a success rate up to 80%. So we are within the limits. But compared to the earlier months, this month the success rate is a little low compared to the earlier months. Earlier months we have seen up to 88% success rate. One reason I identified during this month, the trades are, some of the trades, not some, a good number of trades out of these 8, a good number of trades are failed mainly because of the bear trap, bull and bear traps. And from the traps again we got the trades, because that is what the trading methodology. So what institutions will do? They will try to violate the high liquidity zone. It creates an impression that high liquidity zone is violated. Just below that they will keep a 5-minute trap or 15-minute trap, the bear trap. Or if it is a supply zone, above the supply zone they will keep a trap. That is a bull trap. So some of the trades are, some of the zones are violated because of these traps. So that could be one reason why it looks like there are 8 stopped out trades. And another important observation you have to make, the average intraday ROI is reduced this month. We got only 4.87. So we can say close to 5% only we got. We are supposed to get 6.1% ROI. So that is our average ROI. But compared to that, this month is less. So what could be the reason? That is also I evaluated. So few interesting reasons I identified during this month. During this month, we got a few good number of stocks has provided multiple trades. Same day we got a couple of trades. First trade we got around 5% ROA, second trade we got around 3% ROA. If you take both, if we combine both, you will get like something like 8% ROI you will get. But I am not doing like that. I am not within a same stock, if you get 2 trades, I am not combining them. I am treating each as a separate trade. Because of that, our average is reduced. If I would have combined both the trades together as a single trade, if I document those statistics, you would have got more than 6.1% ROI. But I didn't do that. I considered every individual. One is even in the same stock, if you get 2 trades, I considered them as 2 individual trades rather than considering as a single trade. That is one reason. Second reason I identified, during this month, few stocks, we got trades during the last hour of the trading session. During the last 1 hour or 1 hour 15 minutes of the trading session, we got few trades. So I told you already, any trades during the last 1 hour session or almost close to the closing hour of the market, last 1 hour or 1 hour 15 minutes time, if any trades, do not target for 15 minutes zone. Your target zone should be only a 5-minute zone. So entry is 5 minutes and your target is also a 5-minute zone. Generally high liquidity zones, what we do, we take entry at fine-tuned 5-minute zone, and then we look for the immediate 15 minutes as a target zone. Sometimes we give relaxation. We ignore the immediate 15 minutes. We give importance to the one above that, maybe the second 15-minute zone. In some cases, depending on the market volatility conditions, will change in order to get more target. But anyway, generally we take the immediate 15-minute zone as our target. That way you get 6.1% ROI or close to 6.1, a little higher or a little lower. But when you fine tune to 5 minutes target, obviously that could be only a 2% or maybe 2.5% or maybe close to 2%. That between 2 to 3% ROI only you will get. But that is a good ROI during the last hour of your trading session. Because at least we should have minimum 2 to 3 hours time period to reach 6% ROI. But last 1 hour that is not possible most of the times. The volatility is very high. Probably even if you take your trade during last 1 hour, even half an hour, your trade might be finished in next 10 minutes or 15 minutes if the volatility is very high. But that happens rarely during the closing hour of the market. Last 1 hour, you can't see a huge changes in the volatility. But there are exceptional days will be there. You see, huge change. Market will all of a sudden they change the direction. Evening, afternoon around 2 o'clock or 2:30, and you might be seeing from 200 points down, market will go to 300 points plus or 250 points plus. You might have seen. But those kind of days you will see rarely, not every time. But most of the times, market volatility during the last 1 hour is slow, a bit slow. So because we got a few trades during the last hour of the market, that way that impacted the average ROI of our trades. These are the few reasons. But the other trades that you got in the morning, say for example around 9:30 or 9:45 or 10 o'clock, whatever the trades you got, majority of the stocks you reached an ROI 6.1%. Anyway, I will be posting the Excel sheet at our Telegram group, so you can look into all the trades that we have that are executed during this month. See, remember again I am telling you, these are not my trades. These are the opportunities provided by our high liquidity zones. How many trades in that I have taken or how many trades you have taken, that is up to you or up to me, depending on our investment, our decisions or the other factors will influence that. Sometimes you may not take a trade. Maybe you may not be available on that day during the market trading hours. Sometimes you may take 2 trades or 3 trades. That is also possible. We have seen few days continuously we got trades, one after another. But here, whatever the statistics we are calculating on the Excel sheet is the opportunities provided by our high liquidity zones. These opportunities, are you really using or not? That is up to you. Those opportunities, am I using everything or not? That is up to me. So that's why do not say these are my trades. I never show my trades to you. I also never ask your trades also. But the only thing I will ask you is, because you are learning from with the help of our videos, any good trades you get, and if you are getting benefit with this training program, I can only tell you to share the feedback. But I am not supposed to ask you what is your trade, how much profit you got, how much loss you got, how many trades you did. I don't have the right to ask you. But you can share and you can express your happiness. So please remember to please understand this point, because why I am stressing on this point is, when during the 200 trades session, some of you people misunderstood. You are thinking all the 200 trades are my trades. No, all these trades we've been monitoring from the month October 2023, 1st October 2023 onwards, to check the performance of our high liquidity zone algorithm. If more and more data is available, more and more confidence we get about this concept. Because this is a special concept. A lot of research we did in identifying these high liquidity zones, especially S_DZ and R_SZ, that is support demand zone and resistance supply zone. And they are working very well. Each time prices reaches to that particular zone, immediately it is giving an average 6.1% ROI. Actually, there are short-term trades, but they are giving that return during intraday itself they are giving. Actually, we are supposed to get return in next 3 to 5 trading days. Instead of getting the return in 3 to 5 trading days, in one day itself we are getting the return. Then imagine how good it is going to be. Actually, you have to wait for 1 week to get that profit, but you are getting one day. Next day again you are getting another opportunity. Again next day also, instead of waiting for next 1 week, you are getting in one day itself. If you consider like that, in 5 days we are getting a profit that you are supposed to get in 5 weeks. If you wait for 5 weeks and look for trades, short-term trades, whatever the profit you are supposed to get, that 5 weeks profit you are getting in 1 week. How we are getting every day? Let us assume all the 5 days you got 5 trades. And each trade, it is giving you a weekly return in one day itself. That's why many people are misunderstanding it is an intraday trade. It is not an intraday trade. It is a short-term trade, but getting the return in the intraday. That point you have to understand. See, in any stock, people expect a maximum of 2% in intraday profit. That is extraordinary. 2% ROI during intraday is an extraordinary. But we are getting 6.1% in average. Some stocks we have seen even 7%, 8% also ROI we have seen. See, yesterday you have seen Bank Nifty. It has given you around 8% ROI. By reaching high liquidity zone. Every time Bank Nifty won't reach high liquidity zone. Once in a while it will come. Yesterday it happened and it gave 8% ROI. But if you look into every day, do Bank Nifty give 8.1% ROI for every day? Most of the people, they are happy with the Bank Nifty gives 1% ROI. They are very happy. They get more profits because they buy more lots. Maybe they buy 5 lots or 10 lots. That way they get more profit. But single trade point of view, single lot point of view, getting 6.1%, yesterday you got 8% ROI is not practically possible. But that is possible only if it is a high liquidity zone. Okay, this is about February statistics, and I will be sharing these statistics, the Excel sheet at our Telegram channel after publishing this video. Okay, now let us look into the high liquidity zone generated in our yesterday's report. Yesterday we identified only 2 high liquidity zones. One is Tata Chemicals. Tata Chemicals, we already fine-tuned that zone in our previous lessons during last week. In one of the videos I have fine-tuned. And you know how we fine-tune. The same stock came, but even today we didn't get a trade. But the other one is SBI Bank. SBI Card. SBI Card is a new high liquidity zone generated. It is a fresh high liquidity zone at 75 minutes time frame. So let me go to 75 minutes. But why I am showing this daily chart is, see the candle, how bearish it is. Today's Nifty is a bullish candle. Let me show you the Nifty. The Nifty, we have a bullish candle here. It is a drop-based rally. So today's overall market is very bullish, but SBI Card, it moved quite reverse. At least some influence should be there. If the overall market is very strong, some influence should be there on this candle. But it didn't. We didn't see anything. Throughout the day it is bearish because it is at high liquidity zone. Let me show you the high liquidity zone. See, yesterday, stocks near demand and supply zones video, because we identify high liquidity zones from the video stocks near demand and supply zones. There we are generating from yearly to 5 minutes time frame. In that we look for high liquidity zones only in daily time frame and 75 minutes time frame. Every day I am telling you, these are all the high liquidity zones during the video report generation video. Yesterday we didn't get any daily zones, but we got only 2 stocks, 75 minutes zones. One is 75 minutes demand zone and another one is 75 minutes supply zone, high liquidity zones. And this 75 minutes supply zone gave a trade. See, here we have a drop candle, 1, 2, 3, 4, 5, 6 base candles, and not drop, we have a ERC candle, leg in. And then we have 4 base candles and a drop candle. This is the 75 minutes high liquidity zone. Inside this 75 minutes, we identified a 15 minutes high liquidity zone. This is the 15 minutes high liquidity zone. Here also we have 1, 2, 3, 4, 5 base candles and a drop candle. We have a leg in, 5 base candles and a drop candle. Inside this 15 minutes, we identified 2 5-minute zones. This is what we fine-tuned here. See here? So we have a drop candle, 1, 2, 3, 4 base candle. This is a medium-sized drop candle, and maybe a little. Sometimes you may feel it is a teeny size, but okay, if you zoom, you will get clarity. But 4 base candles and a drop candle and follow-through candles. And also here we have, this is a leg candle, rally candle, base candle and a drop candle. But this zone is already tested multiple times. But each time lot of rejections are coming. Maybe I am thinking this could be a high liquidity area. Maybe next time also when prices enter, maybe there is nothing wrong in taking a risk and take one more trade. It looks like it is tested, but currently it is supporting multi-test. Not only multi-test, the rejections also I considered. See the strong rejections. Here there is a rejection. See the next candle, how it came down. Here also strong rejection. See the move down from here. That means a lot of liquidity is there in this area. This is that sometimes tested zone really work or not. These are all the clues. This is how you identify. Maybe this could be a good zone. We can take another chance. That way you can think. But those who are very strict about, because you don't have clarity, this is high liquidity zone or not. Only if you look into our software only, we can confirm this. So you don't have clarity. You don't want to take risk. Leave the zone. Look for some other stock. But anyway, if you look into this, we have a drop candle, leg-in candle, 4 base candles and a drop candle. And see today what happened? Prices entered into this zone. The morning 9:15, 5 minutes candle. Actually, not 9:15 candle it is. If you look into 1 minute, 9:18 candle, we got the trade. This is the one. 9 o'clock, 18 minutes. Because why I am saying, sometimes what we do, morning 9 o'clock, 15 minutes, first 1 minute, you may not take the trade or you may ignore. Because the gap up, gap down, sometimes it creates some kind of disturbance to our trades. That is the reason why first 1 minute, some people will avoid the trade. After that, they can plan the trade. Some people even avoid first 15 minutes, 20 minutes. But if you are an intraday trader, you have to even, 5 minutes also, 9:15 also, if there is no gap up and if it enters into the zone, you can plan a trade, no problem, even 9:15. But many people will avoid at 9:15 minutes. Even if you avoid, still you would have got an entry in the 9:18 minutes candle. This is the exact entry we got. And when it reached the target, 10 o'clock 59 minutes, say we can say 11 o'clock. So that means within 2 hours, below 2 hours, your trade is completed. In 1 hour 45 minutes, your trade is completed. And that way, SBI has given a profit 6,160 rupees profit, which is 6% ROI. 6% ROI, that is 6.02%. I rounded to 6%. 6% ROI you got. Of course, it is close to our average ROI, 6.1%. And also it is more than this February month average ROI, more than that. Our February average ROI is 4.9%. February is somewhat slow, market also somewhat slow because of the other factors like your budgeting and elections are going to be, election dates will be going to be released, and other international events also happened. Because of all these reasons, there was some slowdown in the market. Even we have seen Nifty also. Nifty moved within a specific range only during this February month. If you look into the entire February month, Nifty moved within a specific range. So this is about SBI card, and the other one is Tata Chemicals. This one we already discussed earlier, this 75-minute zone, because already it gave trades previously. Sorry, we are at 15 minutes time frame. Okay, before that, anyway, we are seeing this, see, this is acting as a high liquidity zone, this zone, the one we fine tuned. This is the 15-minute zone. Sorry, this is not 15 minutes. I think this is also 5-minute zone. 75-minute zone. Something wrong. I have fine-tuned this area. Sorry, how I drawn this zone, I got confusion. There's some change. Maybe it is the LOTL zone. This is also a 75-minute zone, I think. Let me check once. But that one is acting as a high liquidity zone, multi-testing from this area. Let me go to 75 minutes. Yeah. We have a drop, base, rally, and follow through candle. Actually, this is a 75-minute zone. Rally, 1, 2, 3, 4 base candles, again a rally candle. And inside one more 75-minute zone is created, drop, base, rally. And this 75 minutes is an LOTL, which is acting as a high liquidity again. Again high liquidity. The real order flow is starting from here. See here, multi-testing. Already this entire 75 minutes is high liquidity. Inside whatever the LOTL is there, that is also acting as a high liquidity. And here we need to plan a trade in this zone. But already prices entered into this zone on Thursday. Today we didn't get a trade. Then you might be asking why this is showing this near to the zone, because yesterday what happened, it reached the supply zone. Supply zone is 75 minute supply zone is very close and then came down. That's why it's shown near to this 75 minute zone. But to continuation to our yesterday's price action, this 75 minute zone is violated here. The 75 minute zone is violated. And who is responsible for violating this 75 minute zone? This demand zone only. If prices again, if they came back and get into this, definitely we can take a trade. And moreover, now 75 minutes trend is moved to uptrend. It's not only violated this, even there is one more zone. This is also violated. Now trend is changed to the downtrend, 75 minutes downtrend is changed to sideways, and from sideways the trend is changed to uptrend. And who is the responsible for doing all these things? The LOTL high liquidity 75 minute zone. So it is such a powerful. And moreover, what happened before violation? It created a new zone again. Mark this, we have a ERC candle here. Here we have a base candle. You can draw one more 75 minute zone. This is another new 75 minute zone. So inside this high liquidity 75, multiple LOTL 75 minute zones are created. Next time prices come, probably this is going to be a very strong order flow. Because this is the one responsible for this entire move. And also it got zone achievement. What kind of zone achievement? It violated two supply zones. And also this zone made the trend change it to sideways and then change it to uptrend. Now this will act as a very strong zone next time. This demand zone. If prices comes into this zone, don't miss it. Take trades from here. So this is about Tata Chemicals. And also this is about our zone analysis. I hope this information is useful to you. Let us all meet again in our next video. Thank you.